Okay, good morning, traders. Now we have the Scott Pulcini webinar today. So live trading, and we do this every Thursday. We have the Scott Pulcini webinar today. What we do in our education here at Bookmap, well, we have an educational course. We have the live analysis webinar, so you can learn in the live market from the educational course and apply it, and then get the perspective of two different traders, or many different traders. Now we have quite a few on our Discord channel. So Scott Pulcini, futures trader, he's here every Thursday at 10 a.m. We had Jay Trader, stocks trader, yesterday at 10 a.m. We have Rain going over crypto markets in the morning. We have Tom B directly after this webinar here at 11:30 East Coast time. We have options with Doug, a very unique options trading strategies you might want to check out at 1:30 p.m. And then all day long we have the algo boys going through their algorithmic levels, and just it's a looking at where they're finding higher time frame levels in algorithmic activity and marking it on the chart. Some really interesting stuff from all our educators, and would encourage you to go check it out. Okay, so let's move on. You guys know who Scott is. I have his contact information here, so you can put this into the chat and reach out to Scott if you like. I got to go through the disclosures, and then we will jump right in here and turn it over to Scott. So, general disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. The risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. One more note: tomorrow Tom B will not be streaming, so I want to let you guys know about that, as well as our Blue Jacket campaign with the Bookmap Insights. You guys probably received an email about that, and it's really something we'd love for you to take charge in. You can find out more about it on the landing page, but here's the content here. We can go to the competition here, and doesn't seem to be working. Okay. Anyway, it goes to the Bookmap. All right. Anyway, read about it in the email that you got, and it's you can win some prizes in here, and have some bragging rights there about some of the insights into the market that you have. All right, let's turn it over to Scott and get going here. Sorry, Scott, to keep you waiting.
You hear me?
Yes.
What's going on?
Not much. How are you doing?
Good, actually. Just gonna trade here 1 second. Share my screen.
Okay.
I'm gonna go long here, yes. And I'll go over why I just missed this trade. She would be right here. So I got my prices. We'll go over the zone, but my entry price should be 23. So this comes back. I should already be in this trade, but we'll get in right there. I don't love the idea of entering in a prior zone, but we did get a volume event, SI event here, sell ice almost 1,000. the market moved a full ATR away, retested the zone. We see this pattern nonstop, and then as it moves back out, I should have been long right there. Again, if this comes back up, then I'll be filled. But the one thing that I don't like, this was a prior. This was before the numbers came out at 9 o'clock. This was a double whammy. I'll show you here quickly. When new information hits the markets, the prior zones are pretty much obsolete as far as I'm concerned, just because it's new information. But you can see this was an area of a stop run, almost 700, and then another 700 buy ice. That's what I call a double whammy. It's the dumb money puke into the smart money, and that did move above there, and then the number came out and it kind of went through there. But the point is, what I'll do many times is, even though my entry is right here, I'll put it just outside the zone. But if this comes back up here again, I'm fine with entering it. There's a couple other things why I want to be long in this area potentially for ES. You can see here. This is the Fed yesterday. It came out per usual. The initial move is faded, and I can't tell you how many times I've seen that happen. Put in a huge selling tail, started this directional conviction, and we basically ripped through these important zones. We can go over this a little bit, but right now what's important to note is this is a multi-day balance area, so two-sided trade. You can see we're right smack dab in the middle of it. So many times markets will retest either the top of the balance area, like this one did, and rip, or the high volume node. So basically what I'm saying is intermediate term, this is still in a bullish state as long as this can hold this high volume node. If this gets through this high volume node, aka 3700, which is an important spot gamma level as well, then it could get ugly today. So right now I'm giving the benefit of the doubt for holding structure wise, and then if you get the volume set up, that's confirming that same thing. Speaking of which, hold on. So I come up with my thesis every day by looking. All right, I'm filled on that. Let's just get this stopping real quick. Make sure my ATR is still the same. It's actually up to 8. 5-minute ATR I use. Wilder's ATR, which is a default on Thinkorswim. So we're doing 2 different strategies in my trade. When we have a shorter term strategy, reversion type strategy that's more playing for algo, the algo trade, and then we have a position trading strategy that I go over on these webinars. So that actually should have been, with the new ATR, I should have been at 23.5. Hopefully I didn't get filled right to the tick there. Looks like I did, per usual. But again, I should have been in this trade anyway, so I'm fine with that. And it shows me where my stop is. I'm risking 21 points, and I know traders that are new or don't understand, this could be 100 points. It doesn't matter. I adjust my size based on the account size, what I'm willing to risk per trade, and it just tells me how many I can put on total. So 2.75 or 27 micros, I rounded up to 3. So I tell you guys every single week. I'm not going to go on a rant, hopefully this week, but the market, I get so many emails. I like your system, but I just don't like that type of risk, so on and so forth. It does not matter. You're adjusting your size to the risk, and when you adjust to the risk, the current ATR, average true range, you're adjusting to the current volatility. If you are using static stops, as far as I'm getting in, and I only want to risk 5 points when I put on an ES trade, you're not going to be consistently making money, because the market does not care what you're wanting to lose or not wanting to lose. The market cares about volume events and volatility. So the way I trade these is I take both the volume event, which is the most important thing you can possibly have in futures trading, and the current volatility. And from watching thousands and thousands and thousands of these setups, I have determined the best way to stay out of the algo noise is to place stops outside of the volume event, outside of an ATR, because you get these snapback ATR algos as well when the market moves away from these volume areas. So I put my stops outside of those areas, and I just adjust my size, right? So yeah, I'm risking 20, 23 or 22 points on this trade. I adjust my size, but I think based on this, I know based on this current volatility that I can get multiples of that if I'm correct on this trade, right? So Some other factors I look at also look bullish as of right now. This edge is actually, it's been oversold here. We can go over this in a little bit, but this has been above the 67% line. This is just showing you all the stocks in the mini S&P. You can see my tick strike. This is in my trade room. You can see it. Actually, let's get that going too. Get a little torture going. So I got it on this computer, and I have it here as well. And then the other very important thing I look at is our Ludwig levels. So these are incredibly powerful levels for day trading. And when you can combine them with real-time volume events, you have a distinct edge over the market. You can see both these markets, NASDAQ and ES, held the blue lug, right? So now I know I have blue lug. I know that we're at that high volume out of that balance area. I know I have a bullish volume event that actually was even conservative, meaning it did the actual ATR retest failure, right? So all these things are bullish. Then these are all just factors I look at. I don't have one determining, beside the SI indicator and lugs, I don't have one thing that will keep me off the trade just by itself, but just looking at this as well, you can see this is the Spot Gamma Hero. You can get this on Bookmap or through the website, Spot Gamma. You can see all these markets are, so the black line is the current price. Let's actually get this over here because I love tick strike. I love listening to this when it's in my favor. It's not so fun when it's not. But anyway, the black line is the market. And there was a pretty decent divergence a little bit ago where options complex was up here. It's just taking the puts and the calls. So if it's above, it's obviously bullish. Below, it's bearish. I'm talking above or below the black line, which is price. This is not a red light, green light, but it's good to keep an eye on, especially if you get other factors like I do. When everything lines up, that can be an A+ trade, right? As far as you can trade bigger size, so on and so forth. So SPX caught up, SPY caught up, Qs were, this is definitely, see how everything's catching up to the options now, right? So that was another reason that I liked that long. Same with Russell, so IWM. So that is on right now. Some places I will look to potentially get out of this trade or start piecing out of the trade. One is the yellow lug. So I don't usually get out of VWAP. So for instance, like right now, it's kind of struggling at VWAP, which I'll do many times because you have VWAP traders that like to fade it, unless it's confluent with something. This is actually pretty confluent with this. So if we get up here and it struggles, we get up to this 3740. This is a market profile composite. It's about 3742. So if we get up here and it starts to struggle, I'll probably get out of one of them, right? So I pay myself as I'm right in important areas. VWAP by itself, I don't usually get out unless it's confluent with something else, and this is an area where this could stall. If it gets out of here, then we're probably going to rip to this prior one here. So, and then we can get up to these levels, and I'll be looking to hold and or add to this trade. But we will watch up here near this 4042 level. If it gets up there to scale out of one, and then if new setups come in, I'm actually going to delete this. This was before the number, and this was the most recent volume event. So like I said, as this moves up, if we get a new setup, that's ideal, right? So if this thing starts to, which we probably will, if this thing starts to roll up, you probably get like a stop run and so on and so forth. And then I can take, actually I didn't even put my stop in here, did I? No. I want to get that in just in case something silly happens, which happens all the time. Stops at 01, I round down 01.5. Let's get that in. You can see basically where this market stopped too, as far as the, there's another bullish factor right at the Spot Gamma level here. There's a couple different levels. Spiked down a little bit through the number, but held. All right, so you got a lot going on, and Spot Gamma always talks about, Spot Gamma talks about these levels and when to use the hero. Or remember, I just got done saying it's not so much a red light, green light, but the best places are when you see the divergences are at Spot Gamma levels, meaning this was a decent long, and then you got your volume event as well. So there's a lot pointing for this to rally, so we'll see. Again, you get as many factors on your side as you can with your thesis. You get your real-time volume event, you put on the trade, that's the edge. If this, this should, I have the odds in my favor, this should rip up. If this comes down and stops me out, on to the next trade, on to the next trade. If you have a distinct edge, if you follow your rules and are consistent, you will make money overall, right? And that's how you have to play it. It's a probability game. We'll go into that rant, I'm sure, later with the trading in the zone document and so on and so forth. So,
well, Scott, I mean, when you're looking at these so just to encapsulate, so just as kind of a review for anyone who's new in here, you can see what Scott's doing. He's looking at his higher time frame levels as he just went through, and you know, some volume and market profile type stuff there, some other levels as well, and then he's looking at the order flow here in Bookmap, and looking for stops and icebergs to give insight. So large transactions in stops and icebergs, and the reason being is that well, it's uncovering something unique, and now we're looking for the order flow around that unique event. So and then he's going to be holding and managing it for quite a while, potentially. So you know, like 60 points there was if it was going to bounce off that point of control and come back up at 3,800, you know, we're talking 60 points here. So just to put in expectations or understanding of what his strategy is, and Scott, maybe just give some insights like to how long you are holding your positions, because it's hours, it's several hours.
Yeah, it could be hours, you know, depending on what comes in, and you know, certain levels I'm eyeballing to, like we were just talking about that VWAP area, so on and so forth. But yeah, I could be holding this thing for hours. I mean, my main objective, you know, I'll piece out at certain areas like we just talked about, but my main objective is either a major lug, right? So say this thing starts rolling up here, right? Of course, we're getting tortured now, but starts rolling up. I'll get out of one there, like we talked about. Then I'll hold a couple, and I'll possibly watch up here where the, you know, that again, this market profile composites. We can go over these in a little bit. You know, I'll get out of another one, but ideally I will hold at least one of them. I always try to hold at least one contract until we get to a major area and or an opposing volume event. So say this is rolling up, then I get a volume event and it's a bearish volume event. That's when I'll finally exit my position, and then I'll flip and go the other way. But yeah, this could be, you know, if this is my objective, obviously it's going to take some time to get there unless something comes into the market, some kind of information. But I could be in these trades for hours, absolutely. You can even see here. Actually, this is the scalping account. Hold on.
So we get questions about, you know, using order flow on higher time frames, and this answers that question. Yes, and you can see what Scott's doing here.
And you can see here the average hold time. Let's see, it's in here somewhere. This is over like 1,200 trades. Right there. Average winners hold time 2 hours, losers 1 hour. Right, so.
Oh, perfect.
So I could be in this for a while, right? And you know, this is the trade. You have to. This is why I don't. For instance, like I have a profit in this trade right now, right? Do you see me pulling what 95% of traders do? Rookies, you know, amateurs that are like, oh yeah, I got this. I'm gonna trail my stop up, you know, at least to break even, and then as it goes, okay, yeah, I want to make sure I book some money. You know, again, the market doesn't care what you want to make. The market cares about volume events. So yeah, if you want to cut your trade short all the time, that's fine. But you know, your risk reward is not going to be proportionate, and over the long run you're going to lose money. So my point is, if nothing new comes in, I'm going to force this market to come all the way down. Well, that sucked that I have a profit and it gives back, yeah, but over the long run, and that's how you have to think as a trader, if I follow my rules, I don't get snapped out on these whipsaw moves. And it's, again, I say it every webinar, everybody knows this who trades. Algos are probably 90% of the trading here, right? And unless something comes in, and they know when something comes in, and that's what disrupts them, other than that, you're going to most likely get this most of the time. So the point is, don't let the algos get you out of the trade. Make it push through these volume events, make it get ATR. So what I can do here too, I've been implementing this a little more often. So if this starts to roll away from my entry and it gets about 2 ATRs away, 5-minute ATRs, which would still be right now it's, let's see, ATR is almost 9 points. So if this gets 18 points away from here from my entry, so say 20 points, which would be at that 42 level, then you can come up with these kind of rules where you say, okay, well, this market should not pull back more than 2 ATRs, so I'll trail my stop on that. That's barring anything else come in. I'm okay with that, right? Because you can't, you don't want to let a huge winner come all the way back on you. And the point is, you're using something that makes sense, right? So if these markets are truly bullish, they should not be pulling back more than 2 ATRs, right? So I have been implementing that more often. It's been mostly, I've had a couple like crude winners. Remember I said I'm waiting for a major lug or a volume event, and I'll get like 180 ticks in my favor, and it'll get close, and then it won't go, no volume event, and it'll come all the way back. You can't allow that to happen, but use some common sense on why you're getting out of the trade. Meaning, if this comes back outside of 2 ATRs, then I'll exit the trade, right? Because again, if this is truly bullish, it should not come back. The pullback should be shallow, right? But I don't trail my stops, just looking at my P&L. Right? We are approaching this level that we just talked about, so I'll probably get out of one. So this is a great, guys and girls that get Bookmap right away, they start trading off these bubbles, right? The bubbles are just buying and selling market orders, right? They're important, but they're not like tradable importance, in my opinion. It's in most instances. Where you want to watch the bubbles is important areas. So we know this 40 to 42 area, VWAP, and the top of that market profile composite I just showed you, it's an important area. So if I see this struggling and I start to see bigger red bubbles come in, I'll get out, right? Because I know this is a predetermined area. I want to take profit. But if I see this blue, why do I want to sell if no one else is selling, right? So I'll give this a chance to poke through this area. But if I start seeing some red bubbles, and you don't do this and try to find red bubbles, keep it kind of relative to what you're looking at. And then the other thing too, you want to watch liquidity levels if it struggles to punch through here, right? So that now we know this area is important. It filled this liquidity. It's kind of struggling. So I'm probably going to pop out of these. I'm going to give it a second, see what happens, but I'm already cost myself about 4 points. All right, I'm going to get out of one there. So we talked about this exact area. I gave it a chance to punch through, couldn't punch through, and struggled at liquidity. Here's the red, market sellers, I'm out. Doesn't mean it can't do that, but it could come all the way back on me too. So I'm definitely out of one. Let me get out of one of my other account. Now I'm holding another one. Now I'm just letting this go, right? So I got out of one. If this comes all the way back, at least I'm gonna, won't be break even, but the loss won't be substantial. And now I'm looking at these areas to potentially get out of another one, and then I'll let one ride. So this one, let's see here, this isn't on universal for some reason, but the bottom of this market profile composite's at right around 37.65-ish. So, that's close in this area to this yellow lug. So if this comes up to here and we struggle, I'll get out of another one, right? And then I'll try to let one, I will hold it until we either get to the major lug and or an opposing volume setup. And then I'll just do this all over again the other way, right? So, but you can see where this is struggling. These are why you want to know these areas, right? So this was a market profile composite. Quickly for you newer traders, a composite is just multiple days, value areas of days. So value areas are where 70% of the trade occurred in a day, right? So these are individual days. When the following day is, in general, 50% or more of this value area overlaps the prior, I'll merge them. What was that? Hold on. Did I have an order working somewhere? That's interesting. Hold on here. I guess I just got filled on. I may not want this trade because I think this got an ATR below this zone. This was all pre-market. Again, if this feels like a year ago, I don't think think I want this trade. I'm gonna get out of this. I gotta reassess because I think this market punched this volume event. So my trades are disqualified if the market could punch an ATR below. I think this is an ATR below, but we'll come back and look at that in a second. All right, so this is rolling. I'm trying to. What was I just talking about? Oh, market profile composites. All right, so if the days the days overlap, I'll merge them. So this day overlapped that day, so I merge that. Then you can see the following day that merged, or that overlapped. It's about 50% of this day overlapped this day. Merge that. This day, obviously, almost 100% of this day overlapped the prior day, or most of it anyway. So now you got like a 5-day market profile composite. These are very powerful, right? So the rule of thumb is when markets accept into market profile areas, value areas, composite areas, they get to the other side. So now this is very interesting because this didn't get to the other side. That's the natural gas number. Now, if this launches out of here, you're coming up with a story of the bigger picture, like what just happened here. Okay, this should have at least went and tested the bottom here. Didn't. Now it's getting back out of here. This thing may rip. But you can see it's kind of still struggling right here. So this could just, many times markets will get inside, they'll retest it, and then they'll go, right? So that's why I wanted to get out of at least one here. But if this can get out of here, then it should rip. So we'll see. Just keeping an eye on here. Oh, speaking of which, if you guys go to my website, I tell you this all the time, but there's something new on here. All these things are, you get discounts to Bookmap, the Apex Trader funding. We're doing this a ton of test trades, and I'll go into this later if you guys want, but this is an incredible way not to be risking your own money, especially if you're new or working on stuff. So you got Spot Gamma, and then the new one for the Hero. If you want to try it, they got a week, and then if you use this code when you sign up, you get an extra week to try out the Hero, and that's what I'm looking at here. So you can start to see the tendencies of these markets. This is another reason why I wanted to get long. Or why it just bolstered my case of getting long. The market's kind of caught up to it now, so it looks like it's going to be Chop City, but check that out if you want to check out Hero. All right, so I got to change this. You see this market is struggling at this. I could potentially get out of another one, but I'm just going to hold on to it. If it comes all the way back. The ideal thing that will happen here is we'll get a new volume setup and I can trail my stop based on the new setup. Right? I'm surprised there's not been anything, especially with this run up. You figured there'd be some stop runs, but what's important is this market is struggling. Oops. What happened there? At this profile. So this is a pretty important inflection point right now. If this can get out, then I think we're coming up at least to this, at least to these areas. If not, it may come all the way back down and right to the bottom there. The other market I was watching, and I hopefully didn't miss a trade here, so there's a little bit of a different look, right? So what's not surprising is the market bounced off the blue lug, and it's about 120 points worth right to VWAP struggled. So this is going to be important, right? This market opened up outside of this profile composite. Now it's trying to get back inside. If this can get back inside, you expect the other side. Many times markets will do this, and then that. All right, I don't really have anything more on here. Let's see. Should have some composites on here. The problem is when you switch months on Sierra chart, it takes away all of your composites. So when I went to D's, I think I lost all my. We haven't been down here for a while market-wise. That's the problem. Oops, hold on here. Let's see. Yeah, it's been a while since we've been down this low. Long while. Well, that can't be right. I don't know what's wrong with this thing. Let's see.
Scott, got a question on your Trader Sync. Is it to automatically sync, or do you do it that way, or do you manually import them daily?
You gotta manually import each day.
Mm.
So you just, at the end of the day, depending on whatever system you're using, you just go in there, um, just go in here, add trade, bring you to this page. I'm on Pacific time, so I don't convert the times. If you mess with it, if you put it do not convert, it won't show you their own chart. I don't care about their charts. But then you just pick your file. I've got a couple different accounts I'm using, and then you bring it in.
Okay.
Yeah, I was going to show you something else I forgot, but and then you can, for your trades. I have actually I hired a virtual assistant in like India or something. He's in here every day, starting to catch up with all these trades just because I can't. I just can't keep up with them. But I don't have them tagged. But a lot of these trades, like, let's see if he put anything in here. He's going trade by trade and putting in the charts that I need to see. Yeah, so he's already done this one, right? I just got to go in here and put the volume in. This is not what I want to see. Screwed this up. I don't want that like that. But the point is, I want to know what the markets obviously look like for this winter, right? And then I got to go back and replay the day. That's the great thing about Bookmap. You can go back and replay the day and see exactly and trade it. And, you can put on trades as well. But I usually will put that in. I'm just letting him catch it. I'm putting in all this, then I'll go in and I'll add the trades myself. He's actually supposed to be doing the trades too, but I'm a little nervous for him to do that. But it shows you obviously the time I entered, exited, so on and so forth. So this is the best one I've seen as far as the information and the ease of use and everything else. So that you can get discounts on my website for that as well. All right, so speaking of which, we were just looking at this Nasdaq. This was an important zone. This is where we had a huge gap up that led eventually to that big move down. And you can see here, it did get through a little bit, but it's it looks like we may do this today and kind of build balance right here. And this is the middle of this huge bar. So many times I tell my trade room, when you have these huge directional conviction bars on large volume, market many times will retrace 50% and then go, right? So this is that area as well that it's kind of holding. So this is it's getting interesting as far as this could start to be Armageddon to the downside. Spot Gamma actually called this exact thing. He's over the last couple of days he's been talking about, on the regular Spot Gamma. He goes over every day what he's seeing in the options complex. It's actually very helpful. When he says certain things, you go in here and he has every day, but you can go into any of these days and he's been talking about, let's just maybe pull up quickly. This was before the Fed yesterday, right? And watch what he says here. Right here, as discussed yesterday, we continue to believe traders should consider downside insurance via long puts ahead of the 2 p.m. The threat of potentially heavy downside volatility was reinforced by the 60 handle SPX decline yesterday. But one knows that. So he was basically saying that the puts were cheap, the premium for puts were cheap, and based on what he was seeing with the option complex, there was not a lot of support there if it turned around, and that's exactly what happened. So he's calling for eventually before the next major event, which is OPEX, November OPEX, unless something else happens, obviously, in the world. But he's again, he's not looking at this stuff. He's looking at his option stuff. So if you can overlay the options information with your analysis of structure and market profiles and lugs and the real-time volume events, then you have yourself a real edge. But anyway, he's calling for 3,600, and you can see this is call this to the T. I even told my trade room, and I chickened out like a wuss, but I said the market usually, the initial move is usually wrong, and then it goes, multiples the other way. So what you could do is wait for the number to come out, wait for whatever way it goes, and then buy the options the other way. This would have been absolutely perfect. You wait for this pop into this zone on top of it, 3,900. You start loading up on some puts. There's 200 points in your favor and counting. So. Everything I use is pretty simplistic, straightforward, and that's how I like it. I don't like 85 things on my chart. And I like common sense when I trade. And, you know, I'm a volume trader. Volume drives markets. And I don't care how many price points you have on a chart or what indicator you're using. It doesn't mean anything unless you've got the volume events in those areas. I mean, yeah, they could bounce off areas with algos and so on and so forth, but I want to see my important areas backed up by volume events. That is the edge. That is the ultimate edge, in my opinion. And that's how I trade. All right, so just being tortured in that market. Any questions, Bruce, on any of that?
No, not yet. They were looking pretty good here. No.
This was beans, by the way. You want to keep an eye on this. This is about to launch, I think. So I think we talked about this last week. You had a major at least 2 month balance area there. Tried to break down, built more balance, broke out of that, and now we're building balance right in the middle of this high volume node. So if it can get through, not only are you breaking out of this one, if it gets through that on the failed breakdown, you're probably going to see that type of move. So it's going to be very interesting, and you can see this kind of just consolidating here. The next move out of here, you know, one, it could just pull back to this, like we just talked about. Markets can pull back to the top of balance and rip by volume node and rip. That's what we're looking at in ES right now. I'll go back there. Or this can just launch from here. So it's a very important area in my opinion in beans. And I know a lot of you guys don't like looking at other markets, but you're doing yourself a disservice, because when markets are like they are right now and really nothing's going on across the board right now, but a lot of times you'll hear something in grains or you'll hear something in natural gas, and it's all the same stuff. If you understand the volume events, how to draw your zones, which is very straightforward and simplistic, understand the most important thing is the threshold. You need to know what's a lot of volume in that market versus not worth trading, right? And that's what my course goes over as well. We talk about it every day in my trade room. But if you have those factors, then you can make intelligent trades with an incredibly powerful edge. So what I was showing you guys here, why this is potentially again, this is a very important area for ES. So in the back of my mind, I still am remembering the spot gamma call, right? But for right now, this thing needs to get through this high volume node of this balance area. You can see this is right where it's kind of, you know, I could see a pullback to these zones. So this zone is really important for a support. So if we do rip up here, I will be watching this area as well. This was buying tail that led to that. This was, what else? There's some other stuff over here. So I usually try to draw it where the first event occurred, and you'll be amazed at how many more events happen in that area, right? So let's get this strike over here too. But this was at the time gap down, directional conviction led to this move. Came up, you can see it kind of struggled, and then now resistance is now support. Came down, buying tail. Yesterday, hot knife through butter. Really important. So many times when markets rip right through an important area, when the next time they come up, that's a good place to fade it. So I will be watching closely. So this market rips into this zone, that's going to be right at the red lug as well, pretty close. And if I get a volume event, I'm going to take it aggressively to the short side, because I know how important this is, especially that it ripped right through there yesterday. So I would keep a close eye on this zone, basically 37.57 to 37.81. So it's about a 25-point zone. Remember, it's not an exact price. It's just an area where the market will most likely at least temporarily fail. You can see NASDAQ is trying to accept in here. Actually, I think I missed this trade, which is going to be, yeah, of course I did. I was waiting for this, and I got off this chart. So I was going to go long here. This was the volume event here. I think. No, that wasn't it. This was it here, the sell ice. And you got your ATR retest. You got within a couple points of the zone. I go 10% of an ATR, and I know this was within 3 points. There you go. There you go. I was going to go long, and I just wasn't on the screen. This is the one bad thing about doing these webinars. I'm on one screen, so I miss a lot of stuff, right? So that was I don't see any other volume events, so that was definitely a long there. I missed that one. But I mean, I'm long ES, but it's good to get loaded up on both of them if they're both looking. So I had that factor, and then real-time volume showed me a long setup, was showing long, right? And now we're getting back into here. So if that can hold, expect the other side. That's that. So you can see here too with this edge, right? So you see this rally, what I was talking about, and that was another factor that I liked in that long at the time. This thing was oversold. So this is the 67% line. You can see all these stocks. This is just showing you how many are above or below their 5-minute TAS boxes. This is a TAS indicator. This isn't available to the public right now. I don't know why, but it's not. But anyway, mini market TAS 5-minute boxes are just mini market profiles. So it was telling you at the time, 70-80% of the stocks were above their 5-minute market profiles, and many times you get these reversion algos that snap it back. So you can see we did this, and then we did that, and the market rallied. So that was a good place. If anything, we use this in the room not to be initiating. So if I look over here and I see this red is above the 67% line, meaning 67% or more of their stocks are below their 5-minute TAS boxes, I'll show you that here in a second, then I'm not initiating shorts, right? So it at least keeps you out of potential losing trades. And if you initiated short down there at the low, you're taking it on the chin, right? That's just another factor. I know it seems like I have a lot that I'm looking at. It's really not, right? And you just got to bring everything into context with your trades. And the more you can have lined up in your favor, the more you can trade. We talk about all the time, bigger size. Talk about not risking more than 1.5% to 2% of your account size every day, or any day, any given day. But that doesn't mean on an individual trade you can't put on more size. I tell you guys that all the time. When I got back in the business, I was trading with S&B futures, or not futures, the S&B to trade stocks, and they literally ground their traders if they have an A+ setup and they don't put on bigger size. So when you see something, you go for it, and then that's what this is, again, proprietary for my room. Please don't email me asking for this. If you join my room, you get this spreadsheet, and you can, this is for a short-term algo trade that we're working on. It's been pretty incredible. And then you have your position trading, but this is all factored in where you can put in your account size, max loss in individual trade, and it tells you how much you'll be risking, and that's where you get your size, right? So if a trade came in right now, I could put on, I'll round up to 2, so I can put on 2 NASDAQ, right? So that's what's great about this. If you want to risk 4% on this trade, right? So you just change this and say this was an A+. This actually was an A+ setup. I should have put more on here. So obviously, if I risk that, then I've got one bullet left. If I lose on this trade, I'm willing, because like I said, the most you should be risking in a day is about 6% of your account size, no more than that. You got traders out there risking 20-30% of their account. You're going to blow out eventually, trust me. So anyway, if I got 6% that I can lose in a day, well, if it's a great trade, yeah, go for it. Or you can even put in 6% if you want, but if you lose, you're done for the day. So you got to make that decision on your own, obviously. But if I put on 4%, I could have put on 5.5 or 55 MES, or round up to 6, right? See how that worked. This is how you're basing your size. You're not looking at points and still trading, a 10 lot. Say you normally trade 10 lots when the volatility is nothing. But you can't be putting on 10 lots when the volatility, the ATR, is extended, because you're gonna blow out. Speaking of which, this has increased. So it doesn't really matter now I'm in the trade, but it will matter if a new volume setup occurs. So let's see if we can get this thing rolling at least to the yellow lug. I didn't miss that NASDAQ trade. This one is going to leave a mark. So let's just look where I would have gotten in this NASDAQ. I had this all set up. If you guys remember when Bruce was talking, you saw me, I put the zone top and bottom in. I put the ATR at the time, so I should have been in at 10.801, 10.802. Yeah, this hurts. This hurts. So you can see here, this was definitely an ATR. Here's your retest. Here's your failure. Should have been long right there. Stop goes below here. And what would I have avoided? How many guys would have got in here and said, so I guarantee if I put this trade on, whoever was trying to trade with me, which isn't recommended, you got to learn this stuff yourself. But if you put this on and you had this, you're either on a pullback, you're like, oh, I'm out, I'm going to take my profit. Or if it came back, you're like, oh, I can't take that loss, I'm out right here. Well, this is just algos messing with you, taking all the retail traders' money. That's why I put my stop all the way below that volume event. And guess what? Then look what happens. And right now you're kicking yourself. Well, why did I get out of that trade? Please, if you learn anything from these webinars, don't get algoed. Make the algos push this market through important areas. The market doesn't care about what you want to make or lose. It cares about volume events and volatility. So this is now 75 points and counting that I've missed. There's usually one a day, especially when I'm on these webinars. So anyway, back to this. Let's see where the yellow lug is. So I would definitely, if I was long this NASDAQ, I'd be eyeballing this 88.75 area, which is also pretty, we're kind of through it, but this isn't important. The point of control. So all point of control is where the most trade occurred in a value area. And you can see this is where this price traded the most. That's important. So it's an area where I would probably get out, especially when it's confluent with something. Right? But I guess let's concentrate on the trade that I do have on. I have a bad habit of dwelling on the bad things instead of focusing on the good things. So you can also see this CVD, and you can get this in Bookmap too. This is just cumulative volume delta, just showing you who the aggressor is, right? So that means this whole move up is the cumulative volume is agreeing with the move up, meaning they're taking, the aggressor is guys taking the bids in the order book, right? That's all this is showing you, who the aggressor is.
Stock by CL, 158 contracts.
Right, so on this move up, guys are taking, yes, I'm in crude too, we'll go over there in a second. The aggressor is buying. It's you know, again, this isn't red light, green light either, and you can get burned on divergences.
By NQ, 153 contracts.
So now we got some stuff firing up. But what you can't watch this thing. So for instance, say this happens right now. Say we get up here, you can see this is moving up. Then we have a pullback, the usual algo nonsense. And then this comes back to a higher high, and then CVD is like this. Well, that's a divergence. You probably want to be aware that somebody's selling it now, right? So the buyers aren't as prevalent. But right now, there's no worries from this standpoint. They're buying it with the market. The sellers are not coming in being aggressive, is what all this is telling you, right? The other thing you want to notice is this is launching out of here, which is a good thing for the long. All right, let's go and so if I were long NASDAQ, not that I'm dwelling, but I am, I would now, this is what I'm waiting for an ES to happen. There's a new volume event, right? Draw the area, again, go to your cursor. The hotkeys for this, that I'll show you guys how to do that too. It's very helpful, so you guys don't have to be tortured by me drawing zones the old way, where I would go into here, hit edit, color. There's still no hotkeys for colors, but they're working on it. So you want to go where this area spiked right here. You want to incorporate all the prices that happen to spike. So it did spike right here, but you can see the market did come down a little lower. And what I'm also doing now is I take the bubbles away, because I was not, and I put this last traded price line on the chart too. So just go in here, you want to select last price, and then it'll give you this white line. That's going to help you draw the exact area, right? So you can see the price was right there. Draw your, right on there, draw your horizontal line. So that's my current zone. So if I was long this market, and this is what I'm waiting for again in the S, I could then trail my stop an ATR, just outside an ATR, we go 10% of an ATR, outside of an ATR, outside of the top of this, bottom of the zone. So this bottom of the zone is 71, 871. Actually, let's just put this in the spreadsheet to make it easier. But what's important is ATR, as you can see in the middle of the chart there, 35.49. So I'll show you exactly where I would have been out of this trade, and where we can potentially trade this to the short side too. So let's put in our zone. What did I say it was? 10871. It's the bottom of the zone. Top of the zone is 79.75. Oops. 79.75. Put in our current ATR. Again, it's 35.70. It just makes life so much easier using the spreadsheet. You guys watched my webinars in the past. I've done this all by hand and eyeballing it. So this is what made way more accurate. All right, so what this is showing you, if I want to go short aggressively out of that zone, I'd be shorting at 32.8, round up 8 or round down 831.5. But what this is also telling me, if I was long, that's where I would get out. You know, if I did get long that setup like I'm complaining about, I would be out at 831.5. Right, so just to go over this again, I didn't put this one on, but I would have been long. Talked about the long. My stop would have been in 110% of an ATR below the zone. Well, now that you have a new setup, I can now trail my stop to 31 and guarantee myself some profit. So you see, I'm trailing my stop based on something the market is telling me, not because I wanted to, say this was rolling in my favor, which I would have, again, 60 points of profit right now, not because I want to just save my money. I'm trailing my stop based on a volume event. And that's actually what I'm waiting for here in ES. If I can get something like that, I can then take this stop and move it up. But what I will do here, what I was telling you guys, if the market got 2 ATRs above my entry, which it did, right? This is 25 points in my favor, right? No, yeah. 25 points in my favor. So from this high tick, I'm going to trail my stop 2 ATRs, just outside 2 ATRs, so I don't let this come all the way back on me. And I'm being rational about it. I'm not just trailing it to trail it. I'm saying, okay, well, if this market is going to continue higher, this should not pull back more than 2 ATRs, 5-minute ATRs. So the high of that move is 50-50. This one isn't really actually not built into the spreadsheet, but just eyeball it. Right? ATR is 8.54. You can see it right there. So 2 ATRs is basically 17. I'm going to go 10% more. We'll say 2 points. So if this comes back 19 points from 50-50, I'm going to be out of the trade. So that's 31.50. Right? So at least I will guarantee myself that I'm scratching this trade. But I have you have to do this consistently. You can't do it sparingly, right? Once in a while. So I will now, actually we'll just do this. Trail my stop, take it from here, bring it up here. This can push back more than 2 ATRs. I don't want part of this trade anymore, right? That's my safety valve to get out of this trade, right? And basically I'll be making about 10 points overall in the last two. Now what I'm going to be waiting for is an important area, aka yellow lug. The first one to get out of one more if it struggles up here, which it's almost here. Remember, I want to see it struggle. If it just comes right through and rips through, I'm not getting out. And then my ultimate objective is red lug and or a new volume setup that's bearish, right? That's how I'll get out of this trade. But again, this area is going to be really important. So I will definitely look to get out of another one if we get up there, which we're pretty close. Any questions on any of that, Bruce?
No, it's all clear as day.
Just such a great educator.
Yeah, pretty much. That's it.
It really, I mean, if you're new to these webinars, it may seem, especially, you guys got to remember, I'm trading live. I'm not trading at the, after the fact. So it's probably hard to keep up with, but it slows down, especially when you understand the zones, how to draw the zones, so on and so forth, how the market should react to them, using the ATR, and it's a system, it's an edge, and it's from watching thousands of these. So the point is, like, for instance, I had a guy just the other day, it's probably on this webinar, he contacted me. I mean, I'll read you, I'm not going to say who it is, but I'll read you his statement to me, and I didn't understand. This is his exact statement. Hi, Scott, I struggle with the new SI indicator on Bookmap. So again, this can go for anybody who's struggling. Now for a few weeks. Honestly, I was doing better before and have somehow only made my trading more confusing. But I'm on a quest to take my trading to the next level, and I like the idea behind Stops and Icebergs. I found that you are either the pioneer of the indicator or know it really well. I have faith that I can learn it as I never give up. I just need some guidance on how to approach it this more efficiently. If you have suggestions, I'd be much appreciative. Well, that's the whole point of these webinars, of my trade room, of my trade course, right? So the idea is you don't have to learn this on your own and spend hundreds of hours and watching thousands of setups to determine the best way to trade these things. That's why I have a room. That's why you guys get on these webinars, so you can bypass, potentially years of a learning curve and take my system, trade it like I do at first, and then as you get better at it, then you can tweak it to your own liking. But I literally said to the guy, I'm confused by your message.
By GC, 115 contract.
That's my exact response. Hi, I'm confused by the message. Have you been a member of my room? Meaning, have you been in my room and you're still confused? And then it's fine. It's like, okay, well, let's figure out what you're not understanding. I said, have you been a member of my room or gotten the SI indicator course? Or you're just trying to learn as you go? And he's trying to learn as he go. And no wonder he's confused, because he doesn't know what he's looking at yet, right? And there's nothing wrong with that. Anybody who gets this is going to be like, wait, what? So that, I'm going on a tangent here, but the point is, yeah, it's going to seem like I'm going by, you don't know what you're looking at, and everything is so fast and so on and so forth. But, this is what these webinars are for, to teach you how I use this, so you don't have to go through, in my trade room again, you don't have to go through years of figuring it out yourself. So I didn't understand what he was saying to me. It's like, you're not implementing anything that I teach, so of course you're going to struggle at first. Not that I'm some incredible expert, but I have watched thousands of these, so you may want to heed my advice on the best way to trade them. And like I said, as you get better at them, then you can incorporate your own. We talk about it every week. This is the science. There is no disputing this was a 160 stop run. There's no disputing this was the area it occurred. What is the art is how you trade the area. And as you understand them and get better at them, then you can trade them any way you want. So that's what I try to get through to you guys every week. But when you first get it, hell yeah, you're going to be confused. You don't know you have no idea what you're looking at. That goes for anything that you start trying to trade with, right? So if you're on here, I didn't really understand that. I was confused, and then you were saying you were in my room, and you're still confused. Well, fine, let's go over it. But yeah, you're going to be confused if you don't know what you're looking at. All right, 88.86 to 88.74 is this crude. Set up. That's the zone. TR is currently, again, this is just the 5-minute default. 14 Wilder's ATR and Thinkorswim. You can see the ATR in the middle there, 0.297. It's basically saying it's almost 30 ticks is the normal ATR, average range. So this gives me this is for the one trading strategy we're doing in my room, and this is the position trading. So if I want to go short, say if I want to go short aggressively, I'd be getting in at 88.71. No, that's not right. Hold on. Definitely not right. Let's see here. Something is off here. No, this is why, because I put my ATR at 2 ticks versus 29. And usually if something's wrong, it's because of me. It's not because I learned that quickly. It's not because of the spreadsheet. It's because of user error. So here we go. Now if I want to go short based on this current ATR, I would go short at 88.41. Then I would stop out at 89.19. I'd be risking 77 ticks. So that's based on this account size. With this risk, I can put on 4 contracts. Got it? I don't care if this ATR, OPEX comes out and this ATR turns out to be 90, 96. Doesn't matter. It's still all you're changing. Now I'm risking 223 point potential ticks. Doesn't matter. Just change your size, right? Doesn't matter what you're risking. You have to adjust your size based on your gun, and then you're consistent, right? That's the key. Most traders do not. And if I am trading normal size, say I was trading a 4 lot when the ATR is 90, I have a very, very high percentage chance of blowing out my account. Right? All right, let's look at where we're at in crude. Actually, I don't want to miss this exit in. Yes, we're watching it. Yeah, we're right here. I'll come back to crude in a second. So this is the area that I was watching to potentially get out of this one. So we're going to give it a chance to push through here, but you see where we're at. First of all, you got yellow lug. You got baby lug. You've got daily value area high. which is just one standard deviation of VWAP. This is where a lot of these algos kick in, right? So what you always want to be aware of these areas where the algos could turn around and give you the finger, which they do nonstop. That's why they're around, because they take your money all day long. Now, for us to push through important areas, I would want to see high relative volume for this time period. Does this look like high relative volume? No, it can't even get to 100%, which is normal. So do you think the market could push through important areas where the algos don't snap it back if there's no big money playing? Not usually. So I'm very cognizant of the fact of that. Actually, I'm just going to hop out of this one here. It got close enough. I should have been in up here or out up here. This was right around 53. That was close enough for me. I bailed out of that last one just because I'm looking at this volume. It's not that impressive. And this is close enough. You can see where it kicked off of. Got algoed right here. So that was close enough. I could have tried to squeeze out a couple extra points. I still have one on, but this is enough for me to see. Again, it's an area, guys. It's not exact price, right? I just get a kick out of these people on Twitter and these trade rooms that give you exact prices for things. That's not how trading is. It's an area, right? So, if I was waiting for exactly 37.59.75, I may cost myself a complete pullback on this trade. So I'm willing to pop out of there, especially when I saw that relative volume. It didn't quite get up here either. I'm kind of sissy on it, but that's fine. I still got one on, so we'll see. If it can. Now I'm going to hold this regardless. I'm either going to let this come back to. Remember, I'm going just outside 2 ATRs, so this got up to 53.5. He said 2 ATRs was about 19 points. So that's about 30, 53, about 34. So first of all, let's make this one. Let's move this up. Now, if this comes back more than 2 ATRs, I don't want part of it anymore anyway. If this market is going to stay strong, truly stay strong, the pullback should be shallow. It's going to pull back most of the time. This is called Algoville. But there's something going on if this is showing you can pull back more than 2 ATRs, in my opinion, right? So either I stop out of this last one or I wait for red lug or opposing volume event. Since I have my last that's what I do with my last contract. So we'll just let that go. We can trade this potentially. Remember, we were saying 31 was the price, so I could. I don't know what this is here. This was obviously pre-market. So now I'm watching this closely. So first of all, if I was long this, remember we said I'd stop out at 31. Remember, I missed the trade, so it doesn't matter. But if this does get an ATR, if this retest, if this fails, then I'm going short. All right? Because of the volume event. Let's check our other stuff here. So I know my areas, and I know which way I'm leaning as far as my thesis, but I let the real-time volume determine. At the end of the day, it's the real-time volume that helps determine what just happened there. Well, we bounced off yellow lug, so I remember I said I would have been out of one there. Well, there's a reason. Yellow lug prior blue is a very important area in the lug land, Ludwig land. We call them lugs, so I don't say Ludwig levels 85 times. So again, for those, go to our website, ludwiglevels.com. Just got a free 3-day trial. Say you saw it on Bookmap, you get special pricing. But this, these are important levels for a reason, and that's why I would have, if I was long, I would have got out of one. So anyway, now I think 31 is your price. Did we say? For a full ATR out of there. We'll come back to crew here in a second. Let's make sure this ATR is correct. It's still 35.32, so that's close enough. This is the price. This price is a full ATR. It's 110% of an ATR below the zone. That's the full ATR below the zone. I don't want to confuse you guys, but that is the exact ATR below the zone would be 35 half. And it's not a coincidence. This market just touched it and is bouncing off of it. These algos know where these volume events are. These algos love to snap them back when it gets ATR out of there, right? So this is a full ATR. This is my qualification for short. Bruce, would I take a long off of this setup now? So say this market did this and came up here, would I take that long?
Sure.
Not, why not?
Sure.
Oh, F. We've only been on 400 webinars, so I mean, I can understand.
I'm sorry, I wasn't even paying attention. We do have some questions for you when you have a
Okay,
moment.
so I would not take this long now off of this volume event because this was able to push an ATR below the zone. So now I'm just looking for a short. Right? You could, and I did do this often. I'm being a little more, doing a little more sparingly, but you could just get in, say, oh, this is an incredible zone, a resistance zone. The minute this gets just outside an ATR outside of here, then you can short aggressively and not wait because you're not always going to get the retest. Most of the time, right, in my studies, this is just my personal view of what I've watched, you're going to get a retest of the zone 70 to 80% of the time, right? It could go 5 ATRs, but it's going to come back here. This is barring something new. I'd say 70 to 80% of the time. So the point is, I'm trying to be conservative and I'll wait for that. There is a chance that I just miss this trade to the short side, right? I'm willing to risk that if it's not in an area that I love. This is not an area that I love where I want to be aggressively short. We just talked about this. But first and foremost, the market profile. We're actually, I mean, it's close, but this is accepted back in here. Right? So if I were to enter that, I still would have been inside this. So I don't. Why do I want to be aggressive? I mean, this should hold this. So, but say like I got to set up here and it moved out of here. Well, yeah, I might want to be aggressive then, but right now I didn't want to be aggressive there. I could have said, yeah, here's the setup. I want to be aggressive at yellow lug. Maybe. Either way, I still want to see. For me, this is where subjectiveness comes into play, right? I want to see retest failure. Is there a chance it doesn't retest? Absolutely. But I've just seen these enough where I want to wait to see that, then I'll short it. Okay, what are the questions, Bruce?
Yeah, sure. So someone was patiently waiting for your quality rant, Johnny. Scott is the rock
Say
star.
something stupid. Say something stupid, I'll go on a rant.
Yeah, some nice compliments in here. And then Ange was asking, it's an ATR question, but I know the answer. I'll just let you answer it though. I like the way you use ATR, but how do you calculate your ATR based on your stop loss?
I'm not understanding that. Wait 1 second here. Let's change this real quick. I want to show you guys something. No one's ever seen this routine before. So this is the zone I just put in crude. I'll come back to that question here in a second. 1 ATR would have been at 88.47. Let's see if that got down there. Okay, 2 ticks away. So that did not officially get an ATR. I mean, you can use some subjective judgment here. So again, this isn't, that was pretty close, and they're able to, what do you know? You guys ever seen this pattern? I just talked about it for the last hour and a half, basically. So this technically did not get an ATR. So I'll follow my rules because my rules are, I mean, I know it was only 2 ticks away, but we're using the ATR for a reason. And actually, the ATR could, no, maybe not. Hold on. It did contract. Now it's back up to 27.6. No, that's right. So it didn't officially get an ATR below that zone, so I can't short it yet. Right. So, but as I'm telling you, this is the pattern so many times. The strategy we're working on in my room is based on this. Right. So this did not get the full ATR yet. All right. So
Well, the answer is like you're drawing up your zones. You're drawing up your volume event from stops and icebergs. That's the critical area. Now you're looking for an ATR above or below the zones. The stop loss is then, based off of not the entry point, but like, the zones there.
Right. So, yeah. So so say this did this, I'm in, right? So my stop's going to go 110% of an ATR outside of the volume event. Right? You could, so like what I just did with the ES, and it's probably going to stop me out. You could say, so say you shorted aggressively, we were talking about. You could start to say, okay, I'm going to trail my stop 2 ATRs from the lowest point. I let this thing get at least a couple ATRs in my favor, and then I'll do that. I won't do, because then you're basically just setting yourself up for a snapback, right? So I will wait till this market gets at least a couple ATRs, and then I'll start considering trailing my stop based on ATR. Other than that, I just let it go because, like I said, most of the time this market will come back and test this zone, right? So I'm not just right off the bat saying 2 ATRs from every price, right? Whatever the low price is. I'm not saying, okay, 2 ATRs is right here. Okay, 2 ATRs is right. I'm not doing that yet. I will wait until this gets at least outside of 2 ATRs from my entry on top of it. So my entry would have been not from the zone. So my entry would have been at 31, or what did we say, 35, right? So now if I get 2 ATRs from that point, then I can trail my stop. So say it goes all the way down at 10,750. Then I could trail my stop 2 ATRs from there. But I don't do it 2 ATRs from here because I know the market will tend to do that. If this can push all the way down 2 ATRs from my entry, well, then I don't need to let this come back all the way. Say this was like 3 ATRs. I don't need to let this come back 3 ATRs and then 2 ATRs above my zone. Right? What I'm saying is if this market's truly bearish, it should not come back more than 2 ATRs from my entry once it starts rolling down. And again, I let this go at least 2 ATRs from here, and then I'll start trailing my stop. See what I'm saying? Hopefully that's not confusing. That's something newer I've added as well, right? I used to just, because you usually will get a new event, right? So as this thing moves down, this is ideal, and we still haven't had it in the ES. You get your new event, and you trail your stop 1 ATR based on the new event. But there's going to be times, and I told you it's been happening, it happens in crude a lot, where this thing just keeps going down, 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 down. There's no new event. Say I don't hit a major lug, I still have one left. Well, I don't need to let this thing come all the way back on me. It shouldn't come back more than a couple ATRs if this is truly going to stay bearish. See what I'm saying? So I'll add in that one last factor for my last. If I have one left, I'll use that to get out a trailing 2 ATR. Say 110% of 2 ATR stop. Other than that, I'm looking for new events and or major levels. Hopefully that makes sense, right? It's
yeah. I mean,
if I was long and it's doing this and I'm waiting for this, well, I can't. You're usually going to get a new event, but I can't let this come all the way back. And you shouldn't, because it shouldn't. If this is truly bullish, this should not come back more than 2 ATRs. So then that's when I'll finally get out. Hopefully that's not confusing. So that what is a good example here is I didn't take this short aggressively and it may not retest and I'm going to miss the trade. But I was okay with that because this was not an area that I had strong conviction where I'm like, oh, I got to get short right here. Where would be an area like that? Well, if this would have popped up to this zone, then I would have considered it. This zone, we talked about this zone earlier. Directional conviction, buying tail, ripped right through it yesterday. There, I would have, if I get the volume event, there I'll go short aggressively. See what I'm saying? But where we were, market profile wise, chart wise, this was not like I have to be short right here. So that's why I was waiting for a retest failure. Still might get it, but it just hasn't happened yet. I'm probably about to get stopped out of this ES trade, but if I do, it's fine. Still a decent profit out of the next trade.
And one more question, Scott, about related to market profile and the initial balance. Do you put that kind of time period or that kind of strategy within your trading?
I do not. I don't use the volume profile, the initial balance, and I use enough volume in my trading. I love the TPOs, the time price opportunities. That's what these are based off of. These are just every half hour it draws a new one, right, or a new point. I don't use the initial balance stuff. I got enough going on, but yeah, I mean, you can use volume profile. There's a lot of, they claim to be. I've looked at it, and I like the time-based market profile better. But yeah, you could, guys. I'm not saying what you're using is incorrect. What I'm saying is you can enhance whatever you're using by understanding the real-time volume events. I'm not telling you to stop trading. This would be really sweet if I got stuffed out to the tick. That would never happen. I'm not telling you to stop trading what you're looking at, especially if you have conviction in it. What I am telling you, if you have certain areas that you like, your initial balance area, right? This may be the point of control or whatever you're looking at initial balance. Well, yeah, that's great. But what's even greater is if you get a volume event in your area and you know how to trade that area, right? So I don't care what you're using, Fibonacci, D, RSI, moving average cross, the 5,000 indicators that confuse most traders and cause most traders to lose money that are out there. You can enhance whatever you're using by waiting for volume events. Or, you can use the lugs too on their own, but I wait for even the major lugs. I use the volume events at the lugs too. But that's a perfect example, right? These things are incredibly powerful, as we've seen. But I don't trade them naked. I don't just say trading naked. I mean, I'm saying I don't trade naked either, usually. But what I'm saying is when we come down here, I don't just blindly buy the blue lug. Yes, a lot of people do, and like this one would have worked perfectly. I need to see a volume event. Actually, I think there was one down here now I think about it, but I need to see a volume. But here's a perfect example of, I use these, but they're way, way, way better when you can add a real-time volume event in your important areas. And she understands that too. Pamela Ludwig, she's in my trade room. So she's in there always, alerting traders to switching when the lugs roll, so on and so forth. She answers questions too. But she's learning the Bookmap as well because she knows she can make these even more powerful, understanding what really drives markets is the volume. And if you can get the volume setups in your favor at important areas that you love, it's your edge. Yeah, I don't care what you're using. You can use market profile, you can use volume profile, whatever. If you can wait for your areas, get your volume event, it's go time. That's the edge. And that's what trading is. It's an edge. This really, now you guys know why I'm crazy, right? Now you know why I'm crazy. It wasn't an exact tick, but it was very damn close. And then just rips right back up. And it's fine. It's like that's what I determined. Actually, I didn't get the exact price. This is where I might have made the mistake. But I said, I'm going to go to ATR, just outside 2 ATRs from the top of that. It should not pull all of that far back. This may not have been the exact price. That'll make me even more mad. I don't even want to look at it now because it doesn't matter. But that sucks. But, this is one of the reasons I actually don't like trailing my stops unless there's a volume event, because you just get algo. This is just algos playing with your head and your money. And when you look at this volume, this is why it's happening. Volume, or the algos know when there's no big players in here, then they just start taking your cash with the whipsaws. If you guys don't think that's what's happening, then you're in the wrong business. Why do you think, who do you think funds these algos? You, the retail trader that, they know retail traders trail their stops. Well, I had a legitimate reason for trailing that, not that because I didn't want to give back a lot of money, but they know most traders trail their stops. When nothing's going on, it's go time. You guys want to trail your stops? Okay, we're going to move it all the way down there, stop you all out, and then we're going to go all day, every day. If you understand that, you don't get frustrated. Granted, it's not easy to watch if you're human, but you expect it. You know what I'm saying? So my point is, I was okay for this last one, but put your stops away from the volume events and or extreme ATR. This wasn't extreme ATR. Again, I didn't get the exact price, but I'm okay with stopping out of that. That, in my opinion, this market, like I said earlier, if this market's truly bullish, it should not pull. The pullback should be shallow. Yeah, it's going to algo you, but it shouldn't be pulling back 2+ ATRs. That just means something may be up there. That's pretty mild rant there. But what I am waiting for here, if nothing else happens, actually I like to be consistent with my colors. This is good size here. It's a buy ice. I'm still waiting. If nothing else comes in here, this comes all the way back, which it very likely could. Test fails, then I'll go short. So we're waiting on that. The other market we had the volume event in was crude. So like we said, this did not get a full ATR below here. We said 47, so I missed it by a couple ticks. I mean, you could say, hey, that's good enough for me. But my rules are full ATR at the time, right? Technically, let's see if this came down here again. I want to keep an eye on this ATR, especially if you're trading, my trade room, if we're trading the shorter term, we're doing the algo, the other strategy. You've got to keep an eye on this ATR. So let's see if it's dissipating. It's down to 26.2. So let's put that in and see if we could see if this is an official retest failure here. Now, it just moved up one tick. So it still didn't get there, but it got it within one tick. So my point is, if this came down here again, like this, and got to 48, then did that, I'll take that trade, right? At the time when the ATR was 27.5, this was an official ATR. It never got there. There's your retest. Not taking that trade yet because this was not official ATR, but now the ATR is contracted. If this were to get down to 48 and do that, then I'll take the trade. See what I'm saying? So I will, that doesn't happen very often. Usually it'll just be right away, but you can see, look where this market is. It is respecting. This isn't coincidental, right? One, traders that, this was a stop buy stop run, right? So there were invested traders in here. So yeah, there was buy stops. Usually it's not initiation, but there, sometimes there's guys initiating with the stop run as well. Actually, I don't know why my sweeps indicator is not. Let's see what this is set to. This is another way you can see where guys are. Yeah, maybe that's why. So one thing I don't like that they got to change is like set on my ES. So when you set up a new product, like I switch months, it reverts to ES, and then all my settings are on ES. So there you go. See the difference now? I put in 100. There's the sweeps. So what is this telling me? Well, the market swept. So all stops are sweeps. This is part of Global Plus, highly recommended. All stops are sweeps, but not all sweeps are stops. See what I'm saying? So you can get, like for instance, here was a sweep. It wasn't a stop run. That was 134. I wouldn't pay attention to that, but the point is, that wasn't a stop run. So all stops are sweeps because they have to be, right? They have to sweep the book for guys getting out of trades, but not all sweeps are stops. So hopefully that makes sense. But anyway, my point is, in this area, yeah, you had 160 stops. You had there was a total of 400 sweeps between these two. So that means that these are traders that are jumping in on top of the stop run. Stop runs are usually guys puking, right? Yeah, you could stop into trades, but for the most part, they're guys puking. So 160 were guys puking. Well, that leaves another 240 that someone will sweep in the order book. That tells me this area is important. Right? So whoever jumped in and bought these thought they had this market, like, yeah, this thing's going to rip. They're like, oh, wait, no, oh, no, please don't do that. Then what happens? This is not coincidental, guys. This is why this is the most important information you can have. Whoever was aggressive here, they're like, yeah, oh, no, oh, crap, please come back so I can get out. Oh, then let me get out of some there. Oh, let me get out of some there. That's what markets are, right? Just imagine you're the big trader that swept 200 here and you think you got it, and then you're holding on. You're like, oh, God, please come back so I can get out of my trade. Please come back so I can get out of my trade. That's what's occurring. I know it's simplistic, but trust me, that's what's occurring. And, my story gets lost nowadays, and this, I know I talk about it all the time, just to, again, it's not glory days and I'm not bragging anymore. My method of trading worked for a period of time, but what I did see are, I had thousands and thousands and thousands of hours of watching order flow. So that's what these setups are based off of, my experience of watching order flow, right? Millions and millions and millions of contracts. So the point is, all my setups are based on how I used to react as a big trader, how other people used to react, when they would get loaded up, and back then, like I've told you many times, you can see counterparties, you can see the other guy you were trading against, who it was it a local, meaning like just a trader that trades for himself or for a firm, or was it the big money like a fund? You can see all that. You can see the code number. Like for instance, ours was 023. King Street Trading was 023. Gelber, who was my nemesis, was 990. Right. So I would see when I put on a trade, you can see I had a little box right here. Shockingly, they did away with this because I guess people were complaining, obviously. I would trade 100 lot and I would look over and I can see all of them were 990. And you can imagine when you do this day in, day out every day, it's like a poker game. Right? So you can start to see how guys would react. If I'd say I'd jump up and buy another 1,000. I'd look over 990. I'm like, okay, this clown's now loaded up 1,100 contracts. Let me buy another 1,000 from him. 990. You can see every day, and then it just turns into like a poker game. I would know, okay, 990. Yeah, there's different traders in the firm, but they had one big trader there. I'm not going to go into that. You guys want a real rant? I'll lose my mind. But say I'd buy like 2,000 contracts. They all be. I'm like, okay, he's loaded up. I bought him. He's short. If I can push this thing in his face a little bit, he's going to puke. Right? It was like a poker game. But the point is, all these setups are based on how I used to react, how these clowns used to react. These market manipulating clowns. Don't get me started. That's what this stuff is based off, guys. It's not hypothetical. So the point is, the guys that swept this, I'm wrong, please get me out. I'm wrong, please get me out. And that's why the markets stall at these areas. That's the whole idea behind test failure. Simplistic, but that's what's going on in here. In any market.
All right.
And now at least I don't. I'm sorry, Bruce.
No, you very nicely mild rants in here. Very civilized.
It's been very civilized today, but trust me, you do not get me going on the Albert rant.
I don't know. Some people are looking for it here.
So like I said, when I eventually finish this course, it's almost done. My new SI indicator course, we're gonna have an event in here. I think you said, Bruce, and I'm gonna show video of my scalping days. Again, it's not gonna be for kids. There's a lot of talking, and it's me talking to myself and screaming and swearing. But if anything, it's gonna be entertaining. And you guys can see exactly what I'm talking about because on the video, the reason I used to video it because I wanted to see. I literally had the video camera over my shoulder. I wanted to see where I would make mistakes, but then I also had the counterparty showing, so you'll be able to see exactly what I'm talking about when I do this. When we do the event, you're going to see me like buy 1,000, and you're going to see they're all 990, and then you'll hear me swearing that the guy's manipulating, and you'll hear it. The point is, you can see who you traded with. It's going to be tremendous. You guys will love it.
Yeah. We're looking forward to that, Scott, and doing that event with you as soon as you're finished with your course. Just let us know. Let us know in here.
Hopefully soon. So you can see here, this is the other product I use, this tick strike. So this is very important too. It gets really, really annoying. Obviously, you can imagine there's nothing worse than watching your positions go against you and then listening to them. But this is very important because, say I didn't have this up here, but this is another factor. Remember, I was showing that important area. That's why I got out of the second one up there. Well, if you come up there and you don't see any of these stocks these are just meters. They go from 1 to 15 or algo that shows the size of the order and the speed of the order, and they put it into an algo. So it goes from 1 to 15. You can see right here, right? So I have these all set at 11. So I just want to know when there's serious buying or selling going on. But it would probably behoove you to understand what these stocks are doing that drive the indices, that drive the futures, right? So my point is, if you come up to an area, you're contemplating, besides the reasons we've talked about today, right? Like, seeing the bubbles come in. Well, if you come up to an important area and you hear nothing, that is telling you something is not right, right? I mean, you should be hearing crazy buying through an area. There's a very good chance it's going to fail, right? So this is another thing I use in my trading to help me judge. Granted, it tortures me, but it helps me judge what's going on. So, but this is a perfect example. Like I said, from this point to here was just outside 2 ATRs. Well, in my opinion, this market should not be pulling that far back if this is truly bullish. And now you can see, now they're starting to label these things, right? So let's just take a quick look. Overall, nothing's really happening in here. as far as setups, but before we hop off, let's just try to get some context going forward to the afternoon. What could be going on here? Right, so here we are, we're making another. I mean, look how well look at these lugs. They're just silliness, right? It's like bounce off the blue, bounce off the yellow. So now if this comes down, I'm watching that this is NASDAQ. What story are you coming up first and foremost with your market profile? Well, we opened up. This is why I was potentially wanting to be bullish, right? When we missed that bullish trade, I definitely would have been a winner, but I missed it. Anyway, opened up, got inside here. What do you expect when the market gets inside a market profile composite? Gets to the other side. Did it get to the other side? Not so much. Just failed back out of here. That's very, very important information. Now you want to watch, if you have lugs, if it gets down to here and you see relative volume increasing, which we've shown multiple times, you want to be very careful trying to buy the lug at that point, right? So this isn't terrible. It's not great, but as we get to this lug, keep an eye on that, because we already know the story with the market profile. This should have held. It did not, right? They're also starting to hit, so the sellers are taking bids. That's something you want to know. Yes. What happened here? Hold on.
So I've placed Scott's contact information and course and trading room, website, etc. It's all in the chat there. You'll see in both YouTube and in Discord there, the advanced webinar.
Yeah, so, like I was showing you the guy, or I was talking about the guy that said he didn't know what he was doing, and then he's like, I watched some of your webinars, and then he said at the end, like, I didn't know you had a trade room. It's like, well, we go over it every webinar. I have a trade room. Go to my website. The trade room's on there. Just one more time. Here it is, right? Here's all the stuff. Live trade room. Here's your options. Click on that. Scroll down just a little bit. It just takes a little effort. You got monthly, quarterly, yearly, right? It's cheaper as you go further out. And here's the store with the courses. So this NQ order flow course, I've gotten rave reviews. I had one guy the other day email me. I've actually been talking on with him for over a year, and he's like, I didn't like this course. It wasn't up to what I think you would endorse, so on and so forth. This course was done by my old partner. He moved back to Italy, but he was an expert at trading NQ. So I have this course on here just to show a different view, and this was before the SI indicator as well. But he would trade. There's certain levels that work all the time in NASDAQ. They have a lot of it. NASDAQ has a lot of idiosyncrasies, right? So he was an expert at trading it. So I thought it would be good to have a different view on the markets, and that's what this course is. This is literally the first guy that ever complained about it. I've sold many of these. So, and then these other two, this is his other one. He would use this to help him scalp. This was before SI indicator. And then this is mine for stocks. I would use this. This was my main playbook for stocks. So anyway, and then there's the SI indicator course. So that's that. And then I do the mentoring one-on-one. You can get in my trade room and learn. Or if you want, one-on-one, and then I give discounts for, if you do multiple hours, I'll give you discounts for that too. And then the only other stuff on here is all this stuff you get discounts for. So use this. Use these for save some money. Use for your trading. I was going to say something else too. Why did I go on that rant? Can't remember. Oh, and then just take one more look at ES. So this was actually a profile. I don't know. I just deleted I messed up the zone there. Let's put this back. We want to keep an eye on this. This is one reason I wanted to be long, and then it failed, right? So you guys in trading, you have to be ready to pivot, right? I was all for this long. Yeah, we got this. We got up to this area. Remember, I got another one. I'm like, okay. And I said this shouldn't be pulling back. 2 ATRs got out of the last one. Well, what else should it have done? It should not have fell back into this composite. This thing should have gone here. This is telling you something may be changing. You've got to be ready to pivot. So I was gung-ho long. We looked at, remember, beginning of the webinar, spot gamma, everything was saying long. Well, something's changing now. I'm ready to pivot. Now I'm potentially looking. This is still, SPX is still looking a little bullish on the options, but the rest of these are basically just riding. But I'm ready to pivot. Does that mean I just jump in a short? Well, if you don't have the real-time volume and the SI indicator setups, yeah, you're like, Well, first of all, if you're long, you're like, crap, it's back in here, I'm out. Okay, now I'm going to go short. Well, there's a chance it does this, right? So what am I doing? I know my areas, I know what's important, but now I need to see a real-time volume event to trade in that direction. So for instance, this is an example when we were talking about being aggressive with your trades. Well, if I get an SI indicator event right here, say right now, and it moves away, I could possibly be aggressive based on what this is telling me what happened today, right? So it's like this should not got it back in this market profile composite. If I get a volume event, you could be aggressive. Right? This is what I'm saying. This is the subjectiveness of this, where no matter what you're using, this could be a volume profile. It could be back under the balance of the day, or whatever you guys are looking at. Well, you come up with your story, and then when you get your volume event, it's go time, right? Other than that, I'm not jumping in this trade because nothing is happening. So I don't want to be algoed. So I'm waiting for an algo disruption, which is a volume event. Algos do not like big money, big events. It disrupts their game of taking your money. So sit patiently like a sniper, waiting to blow someone's head off, and wait for your setup, and then trade your setup. That's all I do all day long. That's the edge, guys. It's the strongest edge I've ever seen in futures trading. The icebergs and stop runs. And then you add this stuff in, whatever you're looking at, and then you got yourself a trade plan. All right, I'm out of juice. These markets are looking like not good after what just occurred. Again, nothing's come in yet, so this could just be algos messing with everybody. But if I had to make a call right now, I would say one of these by the end of the day. I still have to see a real-time volume event, SI indicator event, to trade in that direction. That's my call.
All right.
And then crude is basically just bouncing around this zone. Here's another sweep. Another example. All sweeps are stops, but not all. All stops are sweeps, but not all sweeps are stops. There was a little stop run here, but this is mostly more traders are sweeping the order book. Let's see if they win this time. I never got in this trade, even if this did get an ATR, it never failed out of here, right? So this is the risk you take because you get it all the time. Well, why don't you just enter in the zone? Well, because I've watched, I used to, right? I used to get, even in my course, I talk about getting in like right when it breaks out of the zone. But I've adapted over the years to say, okay, this is what has to happen for me to be willing to short this. I just don't hop in the middle of the zone because you don't know which way it's going to break. Let it show you, then you get in. And so that's the strategies. All right, Bruce, I'm out of
Yeah, thanks, Scott. So just a few other notes in here for everybody. Look for Scott to come out with that course, new course, and the updates there, and then we'll do an event with special event with Scott, and he'll share some of that rated R content.
It might even be. It might be an NR,
Yeah.
not rated, or it could be even X. Actually, I don't think any nudity happens. But
the other few things. Number one, if you guys are new in here, then maybe you don't know, but we've really built out our Discord room lately, and we have a few new streamers in there, the Algo Boys and Options with Doug. Just to note that Tom B, he is in there now. You can go right over to that one as well after Scott ends here. Just to let you know though, Tom will not be there tomorrow. Okay, so he's off tomorrow, Friday. But then we have Options with Doug. Later today also if you speak German, we have a nice volume profile trader in there, Oliver, and sparring. He'll go through his way of looking at market profile and order flow setups in Bookmap. One more thing, and I mentioned this earlier, so the web page is up now. We're having this competition here. It's the Bookmap Blue Jacket, and looking for some trader insights here from you guys. Your screenshots, videos, other content, your trading setups, your strategies, and there's prizes here to win, and you'll be uploaded to the or you can read the details here, but you'll be judged and have special accesses or notification that you are a winner, it's something that we're hosting now, so it's easy to sign up. Here's your content, sign up in your information in here, and that should do it. So yeah, that's it. Scott, any other things that you wanted to go over?
Not really. It's just, this is a good example looking at this chart too. I mean, you see how these markets respect these volume events, right? It's just, they're just so important to know. And you can come up with strategies where you do take a prior event when it comes back. And again, this is the art, the science. The art is how you trade them. You could say, hey, this moved away, first retest. If it moves back out, I'm in. Stuff like that, guys. I'm telling you, this is not coincidental what you're watching with these markets bouncing off these areas. It's just, market remembers volume. Traders remember where they're screwed. Traders pray it comes back. Get out. So that's what you're looking at. Once you master it, then you have the keys of the kingdom, right? And then you start to add this in again in your important areas and come up with your rules, and you have a trading edge. But this is all I talk about. I do this 2 days a day, 2 times a day, every day in my trade room. So come in there. It's pretty inexpensive in my opinion for what you learn, but you get to watch me trade live like this and learn and ask questions, and there's a community, and there's a lot of good traders in there that have been in there for a while that can help you as well. So if you come in the room, the one thing I ask is you participate. Don't join the room and then be secret squirrel, quiet, hiding in the corner, right? Get in there. Don't be afraid to ask. There are no dumb questions, again, unless you ask it 50 times, get the answer 50 times, and then it's a dumb question. But other than that, I don't care what you ask, you're going to get an answer. If I don't answer it right away, someone in the room will. Use that as a resource to help you guys become better traders, profitable traders. But just please, if you come in the room, please participate. That's all I ask. All right, that's all I got.
Okay, excellent. Thanks so much, Scott. Good webinar, and always good stuff. You're getting lots of compliments in here in YouTube and in Discord. So anyway, we'll catch up with you next week then.
Awesome, Bruce. I appreciate it.
All right, thanks, Scott.
Thanks, guys. Yeah.